Well, with the stock market going up and down in the last week, many are wondering what to do when it comes to saving for college or retirement. And we have somebody here to help answer those questions. Amber Perry from Farmers Financial Solutions. Great to have you back, Amber. You always put our minds at ease. We know what to do once we talk to you. So when we're talking about expenses for loved ones, we all have a parent or, maybe our in-laws that are struggling with their health, and that can be a huge burden to a lot of families.
Right.
But not everybody is able to get life insurance. Like, say they have some health issues that they're what options would you say they have?
There actually are some options, and most people think that if they're older or they have health problems that they can't get life insurance, and that's just not true. There is a life policy they can get if they answer no to just 3 questions, and that would be, have they been diagnosed with a terminal illness or on oxygen therapy? Are they currently in a long-term care facility or some type of rehabilitation facility? Or are they getting in-home nursing care for any type of illness? And if they say no to those 3 things, then it's possible that you could get your parent or yourself or a sibling some type of life insurance to help with final expenses. For a lot of people, even just that little bit of final expenses or being able to take care of a parent if something happens to another is just an expense that they can't take. I had a client just literally a couple months ago that had gotten one of these policies for her parents because they had led a lifestyle that had brought them health issues with addiction problems and those types of things. So knowing her parents did not have the money to pay for any final expenses, or that she couldn't take care of the other parent if something were to happen, she got this particular type of policy. And 5 years later, tragically, just a couple months ago, her father passed away at the young age of 64. She was able to pay the final expenses, and when she took her mother to Social Security and found out she could not get her father's Social Security disability because she was too young, the mother ended up with no income and she doesn't have the ability to work. So it would have been a huge tragedy if she didn't have this policy to help take care of her mom till she gets to the Social Security age to get those benefits herself.
Yeah, and I think the key there was getting it early enough to prepare for that, right? So what would you tell people about when they should start assessing the situation and when they should really take an option like this?
Well, the best option is to get the life insurance actually when you're healthy, because the rates are so much better. But if you find yourself in a situation where there are health problems, the sooner the better. The older you get, the more expensive it gets. And these type of policies do have a couple-year waiting period. They're called a graded death benefit, which means that for the first 2 years, the premium you put into it is all you get back if something happens because of not having all the health requirements. But after 2 years, you would get the actual death benefit. So it's kind of a glorified savings account to help yourself save in those first 2 years. And then if they make it that long, then you get the actual death benefit. So it can really be a helpful plan for your family moving forward to help eliminate a huge financial burden.
Yeah, and we're living, longer and longer now. A lot of people are afraid that they won't be able to afford retirement, after 65 years old.
Right. So really, most people in their 20s don't think, hey, I should save for retirement. It's just not a thought. And if you can start that when you're in your 20s, then it makes a world of difference. But most people really wait till they're in their 40s, 50s, and they think, oh, I should really think about that. All I've really done is contribute to my work retirement plan, and maybe I didn't contribute as much as I could have. And if you think that just contributing to your work retirement plan is going to be good enough, I think that you are in for a little bit of a surprise when you get to retirement.
Rude awakening.
Yeah, there are retirement calculators that are really helpful that you can put in to project what your Social Security is going to look like, where you can actually even go online now and look at what your Social Security benefits are going to be, so it's a little bit easier than it used to be. And you can plug in your income and what you're putting towards your 401k or other investments, so you can see with your projected history of what you've paid into it and what your future looks like, what kind of money you're actually going to have. And another thing that we put into those calculators that most people don't think about is future health costs. People don't think about future illnesses, injuries, and those can just suck the life out of your retirement. And so we actually factor those in as well to help you with the right amount to get to retirement and then come up with a game plan. If you're in your 40s, 50s, or even 60s and you do not have a game plan for your retirement, I highly recommend that you reach out to a financial professional, give me a call, you do want to take a look at what you can do to get there.
And you have to walk before you can run, right? I mean, even a small amount now that's going to compound over time for things like retirement, but also college expenses, right? I mean, that's a big thing we're saving for these days too.
Right,
For our kids.
so if you think about anybody who's had a student loan, will tell you it's the worst loan ever. It sticks with you forever. They keep adding interest and fees, and they're just impossible to get rid of. So you don't want to saddle your kids with a student loan that they're going to take, the next 10, 20 years to pay off. So if you can help your children with a 529 plan, or starting the idea of what to do for their savings, there are even tax advantages that can help you with that. So it is definitely worth looking into when your kids are younger. The longer you have to save, the more options you give them. But think about that option now versus student loans later.
We talked about this, and we only have a few more seconds to answer this question, but what would you say to people or your clients about the economy right now?
Oh man, this last week
and
this week, it's been rough. So what I would say is make sure that you are invested in age-appropriate investments. If you're getting closer to retirement, make sure that you are getting a little more conservative,
right,
and be diversified. That way, you've got a little bit in there when the market does come back up, so you get that upswing, but you have got that kind of good pie chart, they call it, where you've got some of the bonds and things that are going to help you when the market does what it just did.
Yeah, don't be a risk taker when you're older. Amber, thank you so much.
Thanks.
Right now, Amber Perry is offering a free financial consultation. For more information, visit agents.farmers.com /A Perry, or you can call her at 520-296-6532.